Where are we in the, I mean, is this a turnaround story or is this just a last gasp of hope?
It doesn't look like a last gasp of hope. I think that, and you and I have been talking about this forever. Great to see you.
Welcome.
Peloton, the improvement needs to be profitability, not revenues. We're getting a glimpse of that today. We're getting a glimpse of that before we even know who the CEO is going to be. And so that's the question. The question, I think, in a world where every conversation you and I are going to have is about strategy and about elections and about macro and about all these externalities, Peloton's one of the few that actually can take their destiny into their own hands.
How so?
If they look at their business and say we could do more with less, if they look at their business and acknowledge that we still have just about 3 million subscribers that pay $44 a month to get on a piece of machinery in their own home that flows through at high 60% margin, that's a great business.
So what do they have to do what does that mean practically speaking? Is there anything they need to stop doing?
I think that's exactly it. I think there's certain turnarounds where the question is, will they be able to affect a change and be able to do something new? Here, they just have to stop spending their money. And so they're already generating it. That is an easier thing to say than to do. But it's the acknowledgement that the business can be better as it currently is and not chasing this growth. And as long as they can do that, they take that gross profit dollar that they're generating and they don't chase with marketing, which they pulled back.
I was going to ask. So that the biggest, maybe not the biggest expense, but one of the biggest that they should turn off, you think, is actually the marketing spend?
So my team did work on this where we look at their R&D, their research and development. They're spending 11% of sales. If they cut that in half to 5.5, they'd still be industry leading. They spent 25% on sales and marketing. If they brought that to 10%, they'd still be industry leading.
Really?
$600 million of corporate. If they brought that to 3, they would be exactly where they were the last time revenues were this large. When
you say corporate, does that mean this corporate officials have to take a salary cut and things like that, or maybe fewer of them, or?
They have a gorgeous headquarters in the middle of Hudson Yards. There's just, I think, if you and I reflect on where this business was when it started, not that long ago, and then where it erupted during the pandemic, they started believing that they were going to be something dramatically larger, and they built accordingly.
Sure.
Recognize where they are right now, and it's still a massive win. Everyone that the original team pitched this company to, if they could say, at inception to right now and delete everything in between, it's a massive success.
Do they face the risk of attrition of that existing customer base?
Absolutely. And so what I would love to say to you is not only do we have a good downside, we also have time on our side. We don't have time on our side. Because every day, this is fitness. Humans are lazy. I hate to say it, but we have a heavy churn when it comes to this category. They need to protect the current customer.
And there's always the next thing. It's like you said, people are lazy. They also want variety. It's hard to kind of do the same routine over and over again.
So I believe that. I think you're definitely right. I think Peloton has license to move around and find the next thing. But I think what they need to do is make sure they need to bear hug that brand loyalist, that person who is spending $44 a month for something in their own home. They need to make sure they don't leave.
It's $4.50 now, roughly. What's your price target? What's doable here? Or if they followed your plan, what could the shares be worth?
So I like that question. So my price target is mid-6s, which still should give room. If they follow the plan, we have a path $8 to $12.
Okay.
And so there's material opportunity. If they don't, it bleeds. I mean, this is a melting ice cube, to your point, if we lose those existing subscribers.
So now that we've gotten that out of the way, I can ask you what is going on with retail more broadly. The signs is the consumer is choiceful. They want value. They're getting it still. They're still spending. And then we see these partnerships like Walmart and Burger King or Chick-fil-A and streaming. What does that tell us?
Companies are struggling to figure out how to make something new and exciting. And that's the partnership side. And Peloton's a great segue because they're partnering with everyone. We have a Fitbit. We've got Walmart.
True.
But what I think is so important, and these are conversations you and I like to have all the time, it's very easy when it comes to consumer to say high income, low income, good, bad, a lot of rhetoric. We're not done with earnings, but close to it for this earnings cycle. Unfortunately, there's plenty of earnings into Labor Day. It's not very kind, but neither here nor there. What happened this quarter? Massive divergence.
Yeah.
And massive divergence across categories. People think luxury just toppled because LVMH and Kering told us they had a bad quarter. Prada and Hermes were great.
Interesting.
People think athletic toppled because of Adi and Nike are telling us there's a problem. Hoka and On are doing great. And it goes sector by sector. Winners are winning, laggards are losing. And that's a really good thing if you're an executor or a stock picker.
I was going to say it's a stock picker's environment, but it is reassuring on a broad. You mentioned your research team. I just appreciate you bringing one of them with us today so that we could properly acknowledge them for the help that they give. Micah, do you want to come over and tell people about your latest research model for Peloton's SG&A?
The backbone of the team.
Yeah. Thank you for joining us. Simeon, thanks for coming in.